Hey, Ricky Andrade here, founder and CEO of Market Masters Academy. In this video, I'm going to be going over my exact risk management plan. Make sure to fully understand everything I go over in this video before you take any of your own trades or copying my trades to the signals. Now, remember this, you and only you are in charge of your own account. Therefore, you have to have the right trading and risk management plan so you can work on growing your account and avoid blowing your account. Growing is obviously making more money. That's where we're in this industry for, to put money in and make more money out. And to avoid blowing account, which for those that don't know what this means, it's losing all of your money in your trading account and not having any more money to invest. If you have blown your account in the past, then it's probably because you didn't fully understand the concept I'm going to show you in this video. And if you haven't blown your account, then that's great. This video will help you stay in this industry for the long run. Watch this and continue to rewatch it until you fully understand the concept. Let's go ahead and get started. All right. Now for the first part of risk management, I'm going to be covering over risk to reward. Now for risk to reward, the way that risk to reward is, it's how much you are willing to risk on a trade and then versus how much you plan on making on the trade. So my certain plan that I usually stick to is having around that 1-to-2 ratio for your risk to reward. So what this means, now I'm in the US, so I'm going to put dollars here. So it's like if you're risking $1 to make $2. So with doing 1-to-2, it's really good because even if you're a 50% winning trader, so if you win half of your trades, you're still going to become profitable by using this 1-to-2 method. Now, if you're doing like a 1-to-3 ratio, a 1-to-3 ratio is like if you're risking $1 to make $3. Or let's increase this. It's like if you're risking like 100 to make 300. So 1-to-3 is usually the max that I'll go to. There's a reason for that, is because when you get to like the 1-to-4, your stop loss is really tight compared to where your take profits at. So you'll lose most of your trades. You might get lucky on some of the trades, but you'll lose most of them just because it's really tight. The 1-to-2, 1-to-3 range, that's a pretty good range where I've seen consistency and it gives the market enough room to move around when placing the trades. Now I'm going to visually explain how that looks like. On the left-hand side with TradingView, it's about the 6th tool coming down. There's two different types of positions that you can do. Long, meaning you're going to buy the trade, and then short, meaning you're going to sell the trade. So I'm going to bring both of them up here. I'm going to bring the long one and then the short one. So whether you're buying or selling, I'll point it out here. Buying because you predict the market's going to go up, and then selling, you predict the market's going to drop down. Now, if you can see, the red is the same size as the green. So this right here is a 1-to-1 ratio, meaning that you can lose $1 to make $1. Okay, so 1-to-1, I don't really like doing 1-to-1 trades. Only on trades that I'm more confident on, where I have lots of confirmations, that's when I use 1-to-1. This is something where you want to be more advanced in your trading, have shown consistency before using 1-to-1. So for now, don't use a 1-to-1. You want to have your trades at the 1-to-2, the 1-to-2, or 1-to-3. And as I mentioned, 1-to-4 is going to be too much on that. So what 1-to-2 ratio looks like on this example it's going to be double the size of the red. So I'm going to increase this. So if I look at how many pips the red is, I'm going to make it even. It's 500 on the stop loss. So 500 micropips or 500 ticks. And then the take profit, double that is going to be 1,000. So this is what a 1 to 2 looks like on this buy type of risk to reward here. And I'll do the same thing for the sell side. So I'm going to put 500 on the stop loss, and then take profit, I'm going to put 1,000. Now, it's not always going to be exactly 500, 1,000. Sometimes it's like 550 to 1,050, or it changes based off of where you're expecting the take profit to be at. But having that 1 to 2 or 1 to 3 ratio is going to be key, because this is going to help you compound your accounts, even though if you're not as consistent with your trades. So 1 to 2 and 1 to 3. Now, as far as the type of lot sizes that you should be using. So this varies based off of what account size you have. I'm going to go through this next section here, which is going to be the risk percentage. So the risk percentage, what I suggest, if you are a beginner trader, if you're a beginner, you want to risk around 1% per trade. Now, what exactly is a beginner trader? It's someone who doesn't have any experience, and you're like blindly entering trades from signals. So with blindly entering trades from signals or no experience, this is just kind of someone who is just copy pasting, like not really analyzing. The signals should be used as an extra confirmation to enter in on your trade. I know you're receiving the signals from me, which they're highly accurate, but it's still, you want to make sure that you know how to trade. So this is 1% is what you're risking per trade. And let me actually add that on this side. So 1% that you're risking per trade if you're a beginner. Now, if you're an intermediate trader, you're risking, or I suggest risking somewhere around 2 to 3% risk per trade. Now, who falls in the category of intermediate is going to be someone who is somewhat experienced. You've probably taken some training. You've gone through the Market Masters Academy courses, and you're like getting the hang of trading, but you haven't proven consistency, which that's very important, proving the consistency. So 2 to 3% that you're risking per trade. And then if you're an expert / advanced, I suggest somewhere around the 5% range. So 5% that you're risking per trade. And this is someone who's experienced and proven over 50% win ratio with over 1 to 2 risk to reward. Okay, so somewhere around the 4 to 5%, I'll add that here, around the 4 to 5%, if you're an expert, you've proven over 50% win ratio, and you have a good risk to reward. All right, now, the risk percentage and how you're able to calculate that is going to be with an app that I use called Stinu, STINU. Now, in the bottom of this video, there's going to be a link on how to download it, but you do want to get this app downloaded on your phone. It's both on Android and the Apple online version. This is going to help you calculate what percentage or what kind of lot size you're going to be using based off of the percentage of your trades. So I'm going to go through a couple examples, make it easy for you to fully understand this part. Let me go onto my phone right now. I'm going to share my screen on my phone so you can see exactly how I do it to get the risk percentage. All right, so now that I'm on my phone, we're going to go ahead and go onto the App Store. And you're going to want to look up Stinu, S-T-I-N-U. You search it up. And right under this ad right here, it's going to be this purple one right here. You're going to want to download it. I already have it downloaded, as you can see. So I'm just going to go ahead and open the app. Now, before filling out any of this information, we're going to first start off by clicking these three lines on the top left corner. And we're going to want to go to settings. And under settings, you're going to want to put the account balance to whatever currency you're in. So I'm in the US, so it's US dollar. And the risk, you want to make sure that this is at the percentage. And then position size, you're going to want to make sure that it's under lots. And then once we go back, after everything's set up, now the account balance, this varies based off of whatever account balance you have. So I'm just going to use an example as like, let's say 1,234. Okay, so 1,234. Now the risk percentage, that's what I discussed earlier about what type of risk you can do based off of your experience as a trader. So I mentioned beginners do 1%, intermediate 2 to 3%, expert / advanced people around the 4 to 5%. So let's say this is someone who's experienced but haven't shown consistency. So we'll just go with, say, 3%. Okay. Now we're risking 3%. As I mentioned before with the risk to reward, the risk to reward is, it should be at least a 1 to 2, 1 to 3 range. So you're risking 3% to make 6% of your account. Now the stop loss in pips, I actually put this on my signals. Recently started doing this ever since I introduced this Stinu app and doing the proper risk management. But under my trades, I put stop loss in pips. And all you have to do is just enter that right here. So let's say if I put 20. The stop loss in pips is very important because it tells you how much you would lose with your stop loss. And it calculates with the risk percentage and based off of the account balance. So it basically does everything for you. Now, we're going to want to select the currency pair. So whatever pair you're analyzing, that you're trading, let's just do USD JPY. And you're going to want to click on calculate. Now, at the very top, it's going to say you're risking the 3% that you entered. And it shows you how much of whatever account balance you have is that 3%. So you're risking $37.02. Now, this is the risk. So the reward, if it's a 1 to 2, this means you make double what you're risking if you were to lose. So that part is important to understand, just because you should be making more, and having more than 50% win ratio. That's going to be, you're just going to continue compounding your account. Now, down here, you're going to see all these different numbers. The one that you mainly want to focus on is going to be this dark blue area right here. It's going to be between the white and then the light blue. It's going to be this dark right in this area. And it's going to tell you what the stop loss in pips is, because you already entered that. But it tells you the lot size. This is new information here. So the lot size that you should be placing based off of your account size and all the information that you put in. So you can see right here, the lot size, it tells you to place a 0.193. So when you place the trades, you can't place this third number right here. So you're just going to go off of these two numbers right here. So it's 0.19. All right. Now, when you place that trade, and if you were to lose, you already know how much you're going to lose. And if you were to win, it's based off of the risk to reward and what ratio you have. So that's why that's important. Now let's do another example. So I'm just going to exit out here. Okay, so I'm just going to choose a random account balance. So let's say 5,468. All right, risk percentage. Let's say this is for a beginner, so around 1%. Let's say the stop loss in pips is also 20. And I'm going to select the currency pair. And let's say for this one, it's Euro USD. So I'm going to calculate this, and you can see it says 1% at the very top, and 1% of that account size is $54.68 that we're risking. Now, if we have a 1-to-2 ratio, this means we should be making double that. Okay, and I'm repeating myself because I want to make sure that you guys fully understand that portion there as far as risk to reward. And this dark blue area, it says we should be placing a 0.27. So for this type of trade, we place a 27.27 lot size on the trade, and we know exactly what we should be doing. So every time before you place a trade, just go through this calculator, do it really quick. It's going to take a little bit of practice, but it's pretty simple. You just got to enter in your information, the stop loss and pips, the risk percentage, and you're all set. So now that we've covered this part, let's go back onto the charts and cover a little bit more about risk management. Now, the final part that I'm going to be covering over risk management is going to be the win ratio. Now, if you see right here with the risk percentage, I did mention that being an expert in advance, you must have proven over 50% win ratio. What 50% win ratio means is it's like you win one, you lose one almost every single time. So if you have 10 trades, it's like if you were to win 5 and lose 5. Now, I mentioned that being a 50% winning trader, having a 1-to-2 risk to reward is still going to make you a profitable trader. So anything above 50%, but if you have the proper risk to reward, is going to be fine because you're going to be making money with trading as long as you're using the right risk percentages. So everything plays together from what I'm mentioning here. So make sure to have everything correct. But there is a calculator that's going to make things easier because as you have a lot more trades, it's going to help out a lot more. So this calculator here, it's going to be listed at the bottom of this video. This calculator here is called omnicalculator.com. And what you want to do is calculate your wins and your losses. You just enter it here. So let's use that example, 5 wins, 5 losses, and it's going to be 50%. That was an easy one, but when it's more complex, let's say if you have 59 wins and 32 losses, it'll give you the winning percentage of 64.84. So it's good to have an idea of overall what your what your winning percentage is at, because this way you can identify if you're going to continuously make money, and you just kind of know off of the percentage and how accurate you are with your trades. Now, with these win percentages, you want to make sure that you have a good amount of data. So what data is it's having a lot of trades where you can have a bigger number to calculate. So it's more accurate on the win percentage. Because if you're calculating off of 1 week, you might do really, really good for 1 week, and it might be maybe 90% for that 1 week. So let's just say if you have 9 wins out of the week and 1 loss. So out of 10 trades, it's at 90%. This might be a really good week, but the more information that you have out of like months, I actually suggest over 1 month to be able to understand overall what your winning percentage is at. And that's how you can prove that you have a good winning percentage above 50% with good risk to reward to be able to start increasing your risk percentage. Now, leaving this off, I'm going to give you guys a homework assignment. So this example right here, it's going to be USD JPY instant sales, not sell stop. It's going to be instant sell order. Now this is usually how my signals come out, and I'll put my entry, take profit 1, take profit 2, stop loss, and then I'll put my stop loss in pips. So right below in the comment section, put what lot size you would use with the account size. I'm going to come up with a random account size, and it's going to be 4,982. So with 4,982, and let's say this is an, we'll do beginner. So beginner, I mentioned that it's 1% risk. I'm just making this homework assignment a bit easier, but 1% risk off of a $4,982 account. And we see at the bottom of this signal, it says stop loss, it equals to 25 pips. So enter that into the Stinu app and tell me exactly what is the lot size. What lot size should you be placing based off of this account with a 1% at the stop loss 25 pips? This is going to be the best way for you to be able to start already practicing. This is the best way to learn is by doing. So go ahead, do this, comment below this video exactly what that lot size should be. And other than that, we have some other training to be able to hold on to your trades longer. We'll get into that later on, but go ahead, do this homework. We'll talk to you guys soon.